Hi there. Welcome to another episode of the Digital Insurance Pint podcast. I'm your host, Tom Reed, and as always, I'm joined by Steve Earle, CEO of Cheap Insurance, Jeff Roy, CEO of Excalibur Insurance, and Adam Mitchell, CEO of Mitchell & Whale. And this week, we are pleased to be joined by Paul Jackson from Gore. And Paul, I've already forgotten your title.
Tom, hi. Chief Operating Officer is my title. It's quite grand. And it's great to be with you. Thanks very much for having me. I really appreciate it.
Awesome. So what does a Chief Operating Officer do besides have awesome backdrops behind his video camera?
How about this backdrop? It's illuminated.
Awesome.
I was just trying to sort of raise the bar on your podcast here, which hopefully I've done.
Jeff, you missed it. It's real. That's not a virtual
It
backdrop.
is. Oh, it's not virtual. It's actually real. Yeah.
Can you touch it and prove that it's real? We want to see it.
Hold on. Yeah, hold on.
There you go. Look at that.
Hey, look at that.
First real backdrop in dip history here.
And so we've gone through just a tremendous reorganization of our business this year. We have a new CEO. I'm new as COO. We have a new Chief Financial Officer, Lindsay. She was promoted this year. We've got new VPs all across the business. So it's just a real huge transformation of our business, which sets us up for the next part of our journey, which hopefully I'll tell you about a bit later.
Yeah, absolutely. We'll definitely get into that. First, we get to know you a little better and let our viewers get to know you a little bit better first. So we got a few speed round questions.
Okay.
Okay. So favorite Canadian band of all time, Paul? Who's that?
There are Canadian bands. Bryan Adams.
Nice.
Okay.
Well, I think with him working with Andy Taylor, the guitarist from Duran Duran and Power Station, probably dazzled by
Duran
that.
Duran, another fantastic British band.
Yeah.
Okay. All right. So it's beer time. So
Yes.
Paul,
Yes.
which beer have you got going there?
I haven't actually opened it yet, but I'm going to. It's Pucker Up. Pucker Up grapefruit from, don't know where actually.
Garrison.
The Pucker Up East Coast sour. But
I've also gone with the Garrison's Tall Ship.
I've tried to chase a new sponsor. We're going Sapporo tonight.
Oh.
I got Garrison. I got the little juicy IPA. I think somebody had that last episode.
I'm on the juicy, little juicy.
All right, Paul, what is your favorite or least favorite part of the industry?
favorite part has got to be when I get letters from customers. But most of the time I get letters, not so good. But sometimes we get a letter that's people describe how we've sort of, rescued their situation, which is usually pretty dire. It's usually property losses, house fires and things like that, where people have lost everything. And then we've gone in and we've, helped them back on their feet, and they send you letters. And I have to tell you, most of the time we just get on with what we do in insurance, but occasionally a letter comes, or it's usually an email comes past me that really just sort of re-energizes me. So that's probably the favorite part. Least favorite part, it's got to be Microsoft Teams. That has got to be my least favorite part. If you'd asked me in March, I would have said, Microsoft Teams, isn't that so cool? Now I'm totally over it.
Awesome. Who's your favorite Muppet?
Kermit the Frog.
Kermit the Frog. Safe
Hey-ho,
choice.
Kermit the Frog here.
We also would have accepted Tom Reed.
In Britain, when you call someone a Muppet, that's where you're going.
That's
right?
not good. Yeah, it's not good.
It's not a
yes.
good. No, it's not a good thing. It's not a compliment. No.
Okay, fill in the blank. If you were elected Prime Minister of Canada, blank would be legal.
If I was elected Prime Minister of Canada, having British people as the Prime Minister of Canada would be legal.
All right. On the subject of British people, name one of the 7 dwarfs.
Oh, Dopey always comes to mind.
All right. Who do you most admire in the Canadian P&C industry?
It's got to be Charles Brindamour, hasn't it? If you look at 10 years of what they've done in that business, I mean, man, that's impressive.
Yeah.
So, Charles Brindamour, probably the most impressive guy in the insurance industry in the time that I've worked in the industry.
Yeah, good call.
He did turn us down for this podcast, by the way. So.
Case in point.
He's 5 years ahead. He already knows where we're going.
Wrapping up the speed round, if you were given an all-expenses-paid trip to Sarnia, would you take it?
I have been given an all-expenses-paid trip to Sarnia on several occasions, and there's a beautiful highway. And in the winter, it's just all white, and it's snow, and it's actually a beautiful place. So I have been, and yes, I would.
All right, awesome. Okay, let's get into the serious part of the conversation here. So, Paul, you alluded earlier to some significant strategic changes, some significant investments you guys are making, changes to the senior management team. What's the point of all that? What's the goal that you guys are heading towards?
Okay, so we did a huge piece of work, strategy work, a couple of years ago. Andy Taylor, our new CEO, and I led this. We call it Project Next Horizon. And really what we were trying to get at is, we're a mid-sized mutual company here. What does the future look like? What are the drivers of change, the macro drivers of change that are going to influence our future? Consolidators driving on the manufacturing side, consolidation happening on the distribution side, data and analytics really coming into play, customer expectations just, exponentially greater than they have been in the past. And we looked at our business model, and we looked at our scale, and we looked at what we were doing in the market, and it actually wasn't going to take us to the next 10 years and beyond. And so, we had two choices to make. We could either sort of retrench as a regional mutual company and really sort of refind our roots, or we could actually put our capital to work and use that capital to actually fuel a transformation that allows us to grow. So Next Horizon is actually about creating a top 10 Canadian property casualty insurer on the national stage. And we actually think that that's achievable. It's an audacious goal, but it's a doable goal. And that gets us to sort of $2 billion in premium with a sort of a scalable brand and a scalable operating model. And so we think that $1 billion is achievable organically, working with our existing brokers, working in our, penetrating existing markets. And then the next horizon after that, which takes us really to the big prize, we anticipate capital models will come into play, capital models for mutuals, access to external capital, maybe a transaction that might come later for our business that creates a scale for the future. But Next Horizon, which is what we're working on now, is it's really the key to the future of our company. And I have to say, in the last sort of 6 to 9 months through the COVID crisis even, it's just been an extraordinary amount of change for us. We also have a new chief technology officer, a guy called Jazz Dinzer, who joined us from TD Bank. And he's taking a completely new sort of view on core technology and digitizing our business to create a scalable model for the future. Brand new CHRO, Sonia Boyle, again, another game-changing individual. We have Leszek Bialy. He joined us this year as Vice President of Commercial. Gavin Brown-Jowett joined us this year, Vice President of Personal Line. So all new management team, wow, really big ambitions. And, we hired since March, we've hired 70 people. I mean, we only have a workforce of 400 in the first place. And in the next 12 months, we're going to hire another 100 people. So it's a really tremendous time of change for our company. Really exciting, actually.
Is there an example in our industry of anyone who has pulled off this sort of transformation, or are you guys blazing the pretty first trail towards this?
It's actually a great question. And I'm not sure I can think of an example. There's no one operating sort of in a general insurance market like we are, sort of, regional, but multiple regions at our sort of scale, $500 million, who's really pulled off a growth story in the way that we're planning it. But no, I feel like we are, what do you call it? Blazing a trail? Is that right?
Yeah. There's a couple, I mean, I would agree, not to this sort of scale or order of magnitude for the goal set, but economical over the period of years is growing quite a bit. And now they have some other ambitious goals to go ahead. Intact over a longer time period was once a very small company, went to a lot of M&As and operational excellence. You guys were taking a very modern approach in tech.
I guess the difference for us, Adam, is that we're a mutual. So, we have to capitalize our own growth. There are models, taking the US, for example, Liberty Mutual is a gigantic company and does benefit from different sorts of capital structures that allows it to actually access external capital. There isn't a model in Canada today that allows us to actually, access the capital markets or private investors to grow a business. And that's something we're going to look at, because if we create a brand here and an operating model that's attractive from a return standpoint, then, then we could be onto something in terms of scaling our business.
I think it's incredible with the Next Horizon that 181-year-old mutual, one of the oldest mutuals or the oldest mutual in Canada, is able to reinvent itself in such a dramatic way. And I really admire that you're purpose-driven. Do you think you'll be able to continue to attract the top talent?
Candidly, it's been tough for us to compete for talent because, if you've got people who are sort of highly sought after, technologists, front-end developers, marketers, actuaries, commercial underwriters, a lot of these people are attracted to the bigger brands, where there's a value proposition for employees, which is sort of beyond what you might expect at a company like ours. But we made some good progress on that. You're right. We have attracted some talent. And what we're really finding now is that talent attracts talent. And so the new people that have joined us this year come with networks of colleagues and people they've worked with before that have never heard of Gore Mutual. But they say, hey, well, if you've gone there must be a reason. So tell me about it. But it's going to be increasingly, it's still a tough road for us because I said we got 100 people we're hiring next year, and a lot of these roles are sort of specialist roles where people are, at high performing companies today, and we're looking to attract them to join us. It's not an easy thing to do, but yeah, we're actually making some great progress.
What was the timeline for being 2 billion?
So Next Horizon is a 10-year timeline.
10 years. Okay.
Yeah.
So in 10 years, going from $500 million now to 2 billion, clearly you're going to have to make some new appointments and do some expansions.
Yeah.
What about territorial expansions? I mean, beyond new appointments within the territories you're at now, offering good overrides for RSA books during the next 6 months. What about territory? And being from the East, obviously, I want to know about your presence down here. We like what Gore has to offer. We like what you're doing digitally. Can we see more of it?
Yeah, well, the answer to that, Steve, is a resounding yes. We're not going to get to where we need to be without being a national company, having a national footprint. But excluding Quebec, our view is to be a national footprint. Most of the brokers that we do business with, we have room to grow. And so the opportunity for us to strengthen our position within existing brokers, to actually produce significant premium growth, that's our first priority. The second priority that you'll start to see from us probably in 2022 is that we definitely want to start to strengthen our position in Eastern Canada and Alberta and the prairies, where we are, frankly non-existent in some of those markets, but very, very small. And we think there's tons of opportunity to do that, particularly as, and somebody mentioned this earlier, particularly as you see consolidation in some of the large carriers. Naturally brokers say, look, I want to make sure I'm managing concentration. I want to make sure that I've got access to capacity, access to market, access to different products. That creates opportunities for companies like us to step in. So I want to make sure that our timing is right. But the answer is yes, definitely. You will find Gore Mutual, probably starting 2022. You will find Gore Mutual in Eastern Canada and Alberta for sure as a starting point.
You mentioned your affinity or your respect for Brindamour. Intact's originating name was what? The Halifax Insurance Company. I just want to throw that out there. Thanks, Paul.
There was also Western Union, by the way, just so you know. It wasn't just the Halifax. Speaking as a Calgary boy. Now the spotlight's on me. Let's talk about something I'm interested in.
What a dick.
Paul, can you talk to me about what is Gore's position around IBAC DX?
The more cumbersome and difficult the industry is, the more it encourages brokers to leave back books where they are, because it's expensive and complicated to do anything but that. And that's not in our interest. It's in our interest for brokers to say, okay, let's take a look at where these customers are and is there a better solution out there? And we want to be, part of that better solution. So anyway, if you can put some energy and discipline and sort of, cohesion around this and get people at the table, get the right participants at the table sort of talking, then we will support 100%.
So you laid out for us a grand vision of $2 billion over a decade.
Yeah.
And so to reel it back into a closer time horizon, what should brokers expect out of Gore for 2021?
There are 5 sort of key sort of revenue initiatives driving our plan for next year. So this is where brokers will really sort of see a difference in us. First one is around GTA personal lines. We're working with a small group of pilot brokers out of the gate to really strengthen our position in GTA personal lines. A decade ago, in terms of business development, we sort of pulled out of GTA, and we have a market share that, is commensurate with that. Now we've invested a significant amount in pricing. We're on the 5th generation now of a new pricing algorithm that we launched in 2016. We feel very confident in that on auto. We actually call it confident pricing. And we've, in the last couple of years, really invested in anti-fraud capability that gives us real confidence that we should be, actively pursuing a market share for GTA. So that's one element. Second element, which I'm really excited about, and brokers will see a real difference from us next year, is a brand new commercial lines operating model. The strongest growth is actually in commercial auto, fleet and IRCA. We've always made money, but we're sort of subscale. And so we've got a really significant, about 30%, I think, growth plan.
Wow.
Second battlefront is construction. And this is an area where, again, we know that we are profitable, and we're competitive, and we think we're underpenetrated. Third battlefront is in manufacturing, another area where we feel that we can win. So that's not to say we're not going to write other classes of commercial business. We continue to do that, and we do that every day. But I think brokers will see much more discipline and focus from us, and better responsiveness actually in commercial. So that's the second thing. Third thing is we are very, very excited to do deals with brokers in 2021. 2021, we are deal hungry. So we're looking for, against the commercial battlefront, personal lines, mix, whatever's out there that we think we can win on. We are really anxious to do deals with brokers. So that's the third thing. Fourth one is, again, Ontario, focus on personal property, sophisticated pricing. So I said we were on generation 5 on our auto product. We just literally, I think it was last week, we launched Gen 1 of our personal property product. And I know we're like way, way behind the curve here, but the new algorithm is based around personal credit score. So first time for us. And we are going to get some grumpy brokers, I think, because it's going to cause a bit of...
happens.
Yeah, I know.
You already read my email I sent already last week?
Just to FYI, you can credit score auto in Nova Scotia. It's one of the only jurisdictions, if not the only jurisdiction, where
you can do it in Alberta too.
Anything you can do, we can do better.
Anything we can do, you can do later.
Where was I? And behind number 5 is straight through processing.
Oh, this is 2021.
Yes, that's what I said. Wow. The most ambitious plan ever. Guidewire live for personal auto in June and personal property in September. And We're also launching something, I'm not sure it's going to be called this, but we're sort of describing it as the Link Center, because Lynx, Lynx, super cool name. The Link Center will be live to support personal property next year as well. So it's a really more responsive operating model and straight through processing.
Well, I want to go back to when I heard deals. Who's that going to be with, that growth? Are you going to start chasing alphabet houses, national aggregators? Like, what's going to define your growth insofar as who you're going to grow with, and what do those brokers look like?
Great question. I suppose sort of logically, brokers that carry significant volume where we have a low market share, great opportunity there for us. Because, the sort of growth that we're talking about is not growth that's going to attract the attention of our competitors. Obviously when you're growing, you're eating somebody's lunch, but it's not of a scale that's going to sort of, upset the market. It's the sort of growth that, large regional and national brokers are capable of supporting a company like us to achieve. while maintaining balance in their portfolio. So clearly that's a focus area for us. We're also really interested in talking to digitally minded brokers, or, really digitally minded brokers who are actually focusing on investing their own dollars into their own business, particularly when we get through this guidewire thing. Sort of back to Jeff's question, why would you do the guidewire thing? Because we're dead in the water in having really meaningful discussions on digitizing the customer experience with brokers like you if we're on sort of crappy old systems.
What's Gore's split commercial lines to personal lines right now?
30/70 probably now, yeah.
And throughout that plan, are you going to change that volume a little bit?
For the longest time, we were heavily dependent on personal auto, Ontario. We're really shifting that balance now, and through this plan period we'll move to more of a 50/50. In 2021 we'll be pretty much 50/50 personal auto, personal property, and that's been a long sort of standing objective for us, and I expect us to see more balance as we go forward, because that was a real focus on those battlefronts in commercial that I was talking about earlier.
So you've given us a pretty good vision of where you guys are headed with some really ambitious goals. Where do you see the broker of the future going? And maybe it's a good time for an update on the insurance store as well.
There seems to be no sort of let up in the consolidation of brokers. No. There's also a demographics thing that continues to change, right? A lot of people who are realizing the asset they've spent decades building, totally legitimate thing to do. So I guess what I would say, I see perhaps a small number of significant brokerage businesses, national brokerage businesses, maybe part of private equity groups or international groups or carrier owned, and then probably if you fast forward, I don't know, 5 to 10 years, probably a really eclectic group of regional and digital brokers that are forging their own path, whether that is based around a certain geography or brand or customer group, or whether it's based around a certain sort of distribution model or technology capability or something. But I tell you what I do see, though, the traditional, local general insurance agent. I think that's going to be a tough road. You're not part of a large scale group. You're not getting the scale benefits. You're not getting access to the talent and the technology and the sort of sophisticated capability you're going to need to compete. You're going to need to have something that is going to be powering that growth. So I think there's still a lot of change to come. I'm just amazed by the consolidation just continues at a pace which is just extraordinary, and there just seems such an appetite, continued appetite for it.
What's your insurance store update?
Yeah, insurance store. So we've always been pretty open about this. We wholly own a network of brokers that we've acquired over the years. We're actually consolidating all of those businesses together to create one single brokerage and rebranding it as Insurance Store, and that will be a combination of a sort of a bricks and mortar type proposition with also a digital front end, which we're investing in. And I think we have, I'd say fairly modest growth objectives for that. The one thing that we are very interested in and open to are ideas about how we might partner with other brokers to fuel the future of that business. It being a subsidiary of the insurance company, there are lots of capital options for that business in terms of strategic partnerships or whether they're sort of technology partnerships, or we'd even be open to, we're open to any sort of transaction with that business in the future. And the reason I'm sort of open about that when I talk to people is because I'm sort of interested in approaches. If there are brokers out there that say, well, there's something about my business that might be a great fit synergy for your business, we're certainly open to that.
And you're going to use it to kind of to test some of your ideas, and basically a testing partner where you could try some different things. Obviously, Guidewire, hoping to get Guidewire going to do that, right?
That is exactly it. It's actually a great sort of petri dish for testing stuff. I mean, one thing that I think insurance companies always sort of struggle with a bit is, if we're investing in some technology or something, you got to see if it works, right? And so if I come to you and say, hey, can we see if this works? You might say, yeah, great, perfect. But also you might say, oh, it's just a massive pain in the ass and I'm really busy and I got a whole bunch of other things on, and testing your latest idea is not really top of my list. This business actually gives us an opportunity to sort of say, actually, you know, let's test some stuff, and it will come to life next year, because when we are launching Guidewire personal lines, personal property, we will likely do some, you know, sort of pre-testing in Insurance Store, so that it's in better shape. It's in great shape by the time it actually gets out to our brokers.
So is the Insurance Store Petri dish plan through growth to become a swimming pool? You know, CBL, you know, where are we going with this?
Actually, I'll be totally frank with you. At this point, you know, there's no particular sort of secret plan to do anything extraordinary with it. I do think it needs to be a scale business, though. It's like anything else. Like, you know, it's not going to work if it's just sort of a collection of regional offices. It's you know, we do see it as being a scale business.
I've got a few examples of insurance executives that have distribution via broker ownership angles, and it's amazing how fast they know when the market's changing versus the organizations that don't have any line of sight to that and just trust in the goodwill of distribution's good word.
You know, people from the Insurance Store provide me with almost instantaneous feedback when we get things wrong, and it's very candid, and it allows us to course correct before it gets out to, you know, the rest of our brokers, and that's actually really helpful for everyone.
Where's Gore going to go with the paperless initiative in 2021? Are you going to wait till you get Guidewire going and then make the shift? Is that the plan, or what direction?
I'll come back to your question, but COVID, it hasn't really changed our trajectory this year. It caused a bit of a bump for us earlier in the year because we had a whole financial situation to deal with right at the very outset. But I think one of the legacies of COVID is going to be much more impatience from customers for sort of crappy customer experience, because so much was so quickly improved because it had to be. So we are totally committed to getting ourselves to a point where we're at least at the benchmark of customer expectations. And frankly, paperless is a key part of that. Of course, there's also a significant business case there for us around the cost of not just paper, but postage.
Beyond paperless, give me two other things that the industry could do that would really benefit the public perception of insurance.
You know, we have an opportunity to leave a really positive legacy in, you know, when we look back on how we behaved during the pandemic. You know, one of the things that we did right out of the gate in, I think it was April, we literally wrote a check to all of our personal auto customers and gave some premium back. And, you know, it's a combination of, you know, the right thing to do and also being seen as doing the right thing. You know, and then we subsequently, you know, through our foundation gave, you know, $2 million to support, you know, COVID relief efforts. And I think, you know, again, we're now looking at working with the industry wherever we can to support customers to ensure that insurance is available. And, you know, it needs to be adequately priced, but we also need to have an eye on, you know, making sure that we are supporting wherever we can our customers to get through this difficult time. And I think that will have a lasting effect, positive or negative, depending on how industry and carriers and brokers actually play it. It will have a legacy in terms of the reputation for our industry.
Sorry, before your question, man, I want to give a little kudos of a nice move, and that was appreciated, the way that Gore handled that. That was nice from a broker perspective, and it was nice on behalf of our clients. So you showed good leadership and judgment in executing that quickly, I think.
Did you get relief without endorsement?
Yes.
Oh, that's beauty.
Yeah, that's good. It's been really, that was awesome for us. We really appreciated that. Hey, quick question. We're getting close to wrapping up here, Paul.
Yeah.
But one of the things, Gore was one of the first, maybe the first company that actually said, "Hey, we're going to map out the claims adjuster's notes, so brokers know what the heck's going on in the claim file."
Yeah.
Now, going forward with Guidewire and all your changes, what's the plan about building a new claims experience and ecosystem? Is that something in 2022? Do you have any plans next year to do that?
So next year, no, because next year is all about core Guidewire, just getting that in. But on top of Guidewire, there's this thing they call the innovation layer. And our claims people are super excited about the opportunities to start really leveraging API to build in exciting tools that both brokers and customers can access in claims. So we have all sorts of things planned around that. And I think for us, we see that as being the one place where we can really differentiate the customer experience. In the broker connectivity world, funny, we were just talking about this. We actually don't want to do anything radical or crazy or out there. We don't want to come to some of these committees and say, "Hey guys, here's something you've never heard of and nobody else is doing, but it's super cool and we're doing it," because you're going to say that is not the point of this exercise. Whereas in claims, when it's specifically for customer and even broker interactions, that's where we really feel like we can do something stand out, sort of unique and reflects our brand. So I'd say watch this space, Jeff, for 2022.
Cool. So
Awesome.
Into, I guess, a brief overview of how you might raise capital under the mutual structure and drag some Southern models up here or explore some things. Have you then, with that planned newfound capital, thought about buying Intact?
Adam, you weren't supposed to mention that. It was supposed to be. That was supposed to be a little secret. But
I lost track. Are we keeping Brindamour or not? I mean,
well, I did say at the outset that he was my most impressive guy in the industry, right? So
but
I don't know. I think we might keep him on. There might be a BD role somewhere.
Okay. And on that note, we'll move to our closing here. So I got a few questions for you, Paul, and then we'll let you give us your closing thoughts here. So in no particular order,
Yeah.
what problem would you fix with a magic wand? Doesn't have to be an insurance problem. What one problem would you fix with a magic wand?
Inequality.
Awesome.
yeah, nice answer.
We also would have accepted
Awesome.
Trump's hairdo, but that's okay.
Or
Tom's.
concession.
Tom's. What non-insurance company do you most admire and why?
Oh, I hate to say I feel like it's a sort of dirty secret, but I really admire Amazon, but I also despise Amazon. It's like a love-hate relationship. I dislike the fact that Amazon is putting all these small, medium businesses out of business and ruining sort of like, medium towns, main streets where there's all these little shops and different. I really hate
digital Walmart.
I hate the fact that they're killing all these communities and these cultures. But man, it is an impressive business. I mean, that is, again, it's like we were talking about at the outset. There are some businesses where you just think, well, that is some impressive people doing some impressive stuff, very disciplined, focused, and obviously immensely successful. So as much as I hate to say it, Amazon.
Okay, awesome. Tell us something that you weren't supposed to tell us during this conversation here.
Well, I wasn't supposed. Well, Adam did it for me. We weren't supposed to reveal that Gore Mutual was going to take over the world and then buy Intact. But there you go.
Color. It's already the right color.
That's right. Awesome. Okay, so it's a quick shout out to our sponsors. So we have a representative of one of our sponsors here today, Paul. So on behalf of the group, thank you very much to Gore for sponsoring this.
Cheers. Thanks very much for having me.
you,
I
Gore.
really enjoyed it. Yeah.
Thanks, Gore.
Yeah.
You guys are awesome.
Also, shout out to Crew.io and our charity partner who takes all of our money, WIC. So thanks so much for that, guys. And cheers to everybody. So cheers, guys. And
Cheers.
Paul,
Cheers.
let's let you wrap up this episode here. Give us your closing thoughts.
Okay. Well, first of all, I just want to say thanks for having me. I really enjoyed it. I have to admit, I was a little apprehensive coming into this because, You're such a smart, sophisticated guys. Actually, no, that wasn't why I was apprehensive. I was apprehensive
wrong
I thought
podcast.
I was apprehensive because I wasn't quite sure where this was going to go. But I thought if I did the illuminated backdrop, then at least it would set me up as being somewhat professional and I could set a tone. But I really enjoyed it and a good conversation. I have to say, good on you for doing this. And I think the more voices. I think I said this to you, Adam. I think when we first started talking about the podcast, the more voices and the more diverse people you can get from the industry to join you like this, I think you can make something really cool out of this. My parting shot would be just talking to your audience, which I think would be mostly brokers. As always, and I always say this, thank you sincerely for supporting us. I realize that you don't have to. I always say that to brokers. I know you don't have to support us. You can do whatever you want, and so I appreciate the fact that you do. And I hope that you sort of find our vision for the next little while compelling. One thing that is really special about us is that we are a Canadian company. The decisions are made right here. They're made by me, by Andy and our executive team, by Laurie Bader, etc. We make the decisions. We work on a much smaller canvas than some of our competitors, but we're agile and we're responsive, and we are all about working with brokers. And so, if you find our story compelling, then I would welcome you to support our ambitious growth targets. But thanks for having me, guys. I really appreciate it.
Thank you.
Thanks, Paul.
Thank you very much,
Paul.
Paul.
Good to see you again, Paul.
What do you guys think?
The guy just kind of oozes charisma, right? Like you feel like he could sell you a toilet brush and you'd be happy and thankful that you bought this thing. It's like he's just got that. The illuminated background is a perfect piece. Like it's
That's awesome.
Together, and he's open and down to earth, and you could just keep going.
Like they've got a big, hairy, audacious goal. They painted a picture. They're attracting some of the best talent in the world, and it's a stretch goal, but I believe they can do it. Like,
is there anyone dreaming bigger?
Quadrupling? Nobody. Intact's out there doing some interesting acquisitions, but in terms of organic growth, no way.
If I had a concern, I think they might go big with your BFL, your Aon, and your Marsh, and they might try to get in that door and
I don't know
that open and be whores that way.
Politics there, Steve. Like I think they're going to go wherever they need to go to accomplish their goal. So if you're going to be able to provide them with support and growth and period and help support that goal, are you going to be able to give them growth? They have a 4X model that they want to hit. And if you can help them do that, they're going to support where it comes from.
You don't invest a tremendous amount of time, energy, and money into digitizing your business just to go to Aon and pay an override for a $200 million book of business. You're doing that. You're doing the digital investment because you want to have many, many partners and take the sand out of the gears and make that policy by policy thing work. He didn't come out and say that, they're not going to do the big guys, which sure they can do that, but I think they're also gearing up to work with as many players as possible because they're investing in digital.
The thing too is they've got this next year 11%, $50 million growth. If they have competitive rates and they price their products properly and they've expanded their market, their existing partners probably can easily do that. So they're probably not out to appoint great big brokers where they're number 3 or 4 or 5. So I don't see that part of their strategy, right? So
can they demutualize? Can they?
No, they're right. Well, they can.
So they're like Wawa.
They can demutualize, but they've chosen not to, and they're in a different position.
No, Jeff, there's a difference between can and won't.
No. So they've already said they won't. Now they have to have a vote. They've got every policyholder is a vote. I'd love to peel back the onion and learn more about creative ways to raise money from the U.S. as a mutual. If they have aggressive growth plans and something goes offside or they have bad results, that's the only thing really holding them back. But hopefully their pricing model and what they've done will position them so they are, they said they're going to have benchmark loss ratios is what they're planning. Now, if a black swan event happens, that can put you back. And if you can't go to the market to get capital, that's where it's good they're already looking at plan B. But I would love to hear more about that.
Quadrupling in 10 years means that growth rate, it's about 15% a year. When you start talking about 4 times, that's a huge number. When you break it down to, okay, it's 14, 15% per year, it becomes a more manageable number.
15% every year as you grow, it becomes a little more difficult and you have to put more capital into it. The number of new business at 500 million versus $1 million, the scale is just so much more, adding the people in there. And it's good to see they're scaling up ahead of the curve with people. A lot of people want to grow and they put people in last. So I thought that was kind of good. They're actually going to have bodies there to do it, because if you don't have the right people to pull this off, the strategy and all this is all for naught if the people can't deliver, right?
Yeah. Well, and the other part of that too is like, whether you're a broker or company, if you're a $5 million broker, you don't understand what it's like to be a $20 million broker. If you're a $50 million broker, you don't understand what it's like and what the needs are of a $200 million broker.
Yeah.
They haven't been there yet. And there's going to be some hurdles on the way that they didn't see fucking coming.
Look at the amazing marketing branding thing they've taken on in the last bit, where the fact that we can all name their New Horizon strategy, their fast forward event, and like modern mutual handle, like it's no small feat to own that headspace in all of our heads, and that probably put them on the radar for some of the big shops too.
Yeah, and they're almost a purple cow of branding for like that mutual, that size, right? Like they stand out. They look at the guest speakers you said at Fast Forward. Look at their articles. They're interviewing Colin Mockery, for instance, or Strombo, or they're interviewing people outside the industry to learn, to give brokers glimpses of ideas they can bring in the industry. Like I don't know any other market that's doing that, and they're taking a whole different angle and approach, which is good.
As a broker that doesn't have them and they're not in my territory, I almost see them as doing the reverse of what Wawanesa did. Wawanesa got really, really big quietly and had no digitization, had nothing, and then decided to wake up and, holy fuck, we got a monster we got to fix. Whereas these guys are smaller and they're trying to fix it now and then go big.
Yeah. They're using digitized to grow. They're trying to, that's their strategy. One, along with being purpose driven, and the other three things are platform. They're doing that, right? So it's exciting. Like it's nice to see some Canadian companies doing some different things, right? So
I'd like to see them out here, and I'd like to talk to them first.
All right. So also, Steve, we'll put your phone number on the bottom of the screen here, so Paul can call you when he comes out to Nova Scotia.
That's right. If he doesn't come see me first because I sent him fucking beer, he'll never get another fucking beer again.
Let's make a deal. Well, Lori Vader, let's make a deal, all right? Hey, you know what? They got some culture, they got some pizzazz, and it's great, some swagger, and it's nice to see in the industry, right? So